Welcome to Illuminati Silver. We tell you the truth about silver. Today is Tuesday, the 26th of January 2021, and we're specifically looking at the relationship between interest rates and their effect on gold and silver prices. So let's take a look. Firstly, just a quick shout out to our video we produced or published yesterday, which really has prompted today's video subject because of the questions that we were asked. So the video we published yesterday, and we've put a link below, is will the US dollar resume its decline as gold and silver prices rise? Now it's just after 1:30 p.m. GMT. We can see the US dollar index is standing at 90.31. Higher than we produced at yesterday's video time, but lower than it has been in the past 24 hours, and quite possibly it may reduce further as the day progresses. Gold is standing at $1,858, down $8 on the day, and silver's price is $25.57, down 14 cents on the day. And even though we're expecting the dollar index to fall, we're also rather suspicious from what we're seeing, what's going on in the markets, that perhaps both gold and silver prices may fall as well, a little further. Not significantly, but a little further than the current price. But let's wait and see. We could, of course, be totally wrong. So what actually does happen to gold and silver prices when rates go up or rates go down? You see, there's a common belief, widely perpetuated, that there exists a strong negative correlation between interest rates and the price of gold and silver. Now we shall concentrate more on gold for the rest of this article, but it does broadly apply to silver. But gold is perceived predominantly to be the main monetary metal, whereas silver has a much higher industrial application component to it. But it is affected in a similar but not the same way as gold. Now, when looking directly at interest rates and the price of gold, we can see that since 1970 through to 2020, the correlation between interest rates and the price of gold has in fact been less than 30%. And in statistical terms, this is not regarded as being particularly significant or revelatory. The bull market that occurred in gold during the 1970s, which reached its peak for that century, was against an environment of high and rising interest rates. Between 1971 and 1980, one-year Treasury bill rates moved from 3.5% up to as high as 16%, while gold prices moved from less than $50 an ounce, oh how we all wish those days were back, to just shy of $850 an ounce. Just imagine being able to buy gold at $50 an ounce. During this period, there were short-term instances of correlation, but taking the decade into account, and particularly the large price moves from 1978, with equally aggressive rate rises, certainly suggests that the relationship is far from negatively correlated. Now, by that we mean moving in the opposite direction to one another. Rates up, gold down, rates down, gold up. Now, broadly, the following 20 years showed declining gold prices and declining interest rates. Some economists will suggest, on the face of it, that in the 2000s, generally interest rates declined and gold prices rose. Therefore, the negative correlation applies. But this can be counteracted by the fact that gold prices peaked well before the more severe declines in interest rates began. In addition, the federal funds rate rose from 1% to 5% between 2004 and 2006. And gold also rose during this period, up almost 50% in price terms, US dollar price terms. The 2008 crisis is an additional example in point, as one would have expected gold prices to soar at this time as rates were slashed to 0 to 0.25%. That's the Fed funds rate. But gold waited really until 2011 before it peaked. So what does drive gold prices then if it's not interest rates? Well, first of all, let us add that expectation of, or the actual rise in or fall in rates can and often do have a very short-term effect on prices, particularly since computerization, as there is often a knee-jerk reaction to the impending or actual news. Lots of stop losses put in, thereby causing markets to move dramatically, and sometimes, as far as individual investors are concerned, and particularly those who perhaps watch their portfolios all day, and we've done that ourselves in the past, one cannot help but to react sometimes, if not too often, to impending news. Now, to some extent, this is anecdotal in that we haven't scrutinized in depth every interest rate announcement and gold's immediate response. But we have watched markets closely enough over a number of years to witness this short-term knee-jerk reaction for ourselves, even though on many occasions that reaction is not sustained much more than a few hours, or in some cases a few days. In the long run, manipulation aside, not being considered for the purpose of this debate, the price of gold and silver is a function of supply and demand. We can see often that China and India reduce their gold buying when prices rise, and yet miners are encouraged to mine more, or open, if they can, what were previous uneconomic seams as prices rise, thereby both those activities dampening down the gold price. And equally, the opposite occurs. One could argue quite strongly that rising and higher interest rates may be bullish for gold prices simply because they are typically bearish for stocks. In other words, investment monies going into equities. When interest rates rise, stock market investors often flee equities as they go up in order to place their monies into other asset classes, often fixed income investments, because they acknowledge that company borrowing costs will rise, and therefore those companies' underlying profitability and the knock-on effect will be an adverse reaction in the share price. So as rates go up, equity stocks, not all, because certain stocks like higher rates, such as banks and financial service stocks, but as broad brush equity markets fall, those monies go into other forms of investment classes, often high interest bearing accounts or bonds, but also occasionally into gold and silver. And this is where their inflation hedging comes in, and we'll talk about that shortly. Now, this is an important reason why we see a resurgence, particularly in bond buying, when interest rates go up. Now, given the historical tendencies of the actual reactions of stock market prices and gold prices to interest rate increases, the likelihood is greater that stock prices will be negatively impacted by rising interest rates, and that gold may therefore benefit as an alternative investment to equities. So, while rising interest rates may increase the US dollar value, pushing gold prices lower because gold is denominated in US dollars, factors such as equity prices and volatility coupled with general supply and demand are considered by many as the real drivers of the price of gold. But finally, there are some other factors too also to take into account. Recent performance, whenever that time frame is, may suggest that gold or silver have been overlooked while investors have invested elsewhere, and a price correction is often required and happens regardless of the interest rates at the time. Other competitor products appearing on the investment field, as it were, such as Bitcoin, also affects gold and silver prices to some degree, again regardless of the interest rate environment. But it is the issue of inflation which, in our view, is a significant factor, influencer of the gold and silver price. And we plan to discuss this in another video, as we have just run out of time. So watch for that over the coming days. So what do you think? What do you believe interest rates have a dramatic effect on the price of gold and silver? Is there a negative or positive correlation? Do share your thoughts. Meanwhile, thank you so much for listening. And if you haven't already done so, do please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they are published. We hope you have found this video interesting and informative. And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.